If you could give your 2 cents on this, because it's coming at the back of last week's deal with European Union. So how do you see this panning out?
I think, one of the biggest negatives that we've seen in recent times has been the persistent rupee slide. And that has been courtesy because that from a Indian government point of view, they chose the fiscal resources to move to consumption, courtesy the tax cuts and the GST cuts, etc. Right? But they didn't want to or they didn't want to use those resources to protect the exporter. So therefore, their line of defense to help the exporter has been in terms of weakening the rupee. Now, while therefore that became the channel to help the exporter lobby, this also has a near-term negative impact on foreign owners of equity. Because if you're expected to make, say, 10-12% of earnings growth in a particular country and you lose, say, 5-6-7% in currency, you are eventually effectively left with whatever 4-5% of residual returns, which possibly may not even be beating, say, the US treasuries at this point of time, right? And therefore, we saw persistent foreign selling, primarily because of the currency depreciation that was to come through, right? So I think, like I said, the matter of fact is the government very, very beautifully over the course of the last 18 months have unlevered many, many such initiatives, focus on domestic, monetary impulse coordination better, rupee depreciation to help the exporters. As you rightly said, multiple trade deals that have happened bilaterally, etc. So and then the rating upgrade also in this milieu. So therefore, when you look at it in totality, we now have think of it like a coil a spring which is coiled in. We've done a lot of these things, with the prospect that corporates will now start investing and taking advantage of all of these enabling frameworks, because that is what the government can do to enable an environment where business is conducive. And if businesses start deploying more capex, start earning more profits, I think it's only natural that stock markets will start rewarding. And lastly, because the currency depreciation fears that were there, that kind of puts on a lid. That means that foreigners can now evaluate it, without the fear of massive currency depreciation. So I think this is something that is very, very welcome. This does reduce the level of uncertainty quite significantly, both on the ground for corporates and as well as for market participants. And therefore, this can potentially lead to a lot higher kind of valuation sustaining over a period of time, provided earnings does come through.